Hi, I'm Jenny Brown. Welcome to this week's MFB News. I hope you've had a really good week. We have been so busy with new applications. We've trebled the number of applications this week that we do traditionally in a normal week. And we'll go into why that is in a bit more detail. Now, in terms of what we've got for you coming up, so we're going to do our usual roundup of lender changes. I'm then going to offer up some practical advice in terms of what you can do to protect yourselves with interest rates going up. So some of the kind of little hacks, as it were, that may be interesting to you to kind of give you an opportunity to take a fixed rate maybe in advance of where you thought you would be able to. And also actually what you can do to ensure that you're in a position to get your application in and the rate secured really quickly if you are looking to take a mortgage deal in the coming weeks and months. And then lastly, what I'm going to do is just share some information in terms of what's going on with regards to rent arrears and how that's looking as well, just to give you a kind of feel of how things are, I guess, shaking out in the landlord space at the moment in terms of lender payment behaviour. Okay, so it has been another very busy week this week in the space of lender pricing changes, and unfortunately in the main they're still going up, not going down. So what have we seen? So first of all, we have seen BM Solutions make increases of up to 0.1%, so 10 basis points across their purchase range and 0.24% across their remortgage range. However, interestingly, across some of their products, so the lower loan to value products, it looks like they have made some small decreases as well of up to 0.11. So essentially what they've done is they've looked at their product offering, they have gone through it and decided that actually this rate is too expensive but this rate is too low, and they've kind of jigged things around. But looking at the information provided from them in the main, we've seen rates going up rather than down. Now, the Leeds Building Society have certainly kept us busy. They've made 2 reprices in the last week. So what they have done is essentially increase rates by up to 21 basis points. Now, the other thing that's quite interesting that they've done is they have introduced products for remortgages where there is the option for free legal work rather than cashback. So what they've traditionally done is rather than offer free legal work on remortgages, they've offered the borrowers cashback. From memory, I think it was £250, £300, that kind of mark. What they've done now is that actually going forwards, we're not going to offer the cashback, we're just going to offer the free legal work. Now, just a bit of a kind of heads up on this. Lots and lots of lenders offer on remortgages free legal work. And when you go down that route, you need to use a firm of solicitors that is the lender's choice. So there are several large conveyancing companies who seem to kind of largely clean up on this in terms of having a real monopoly over the market. So what you will find is that if you're using the lender's own solicitors, which is a free legal service, you are kind of to some extent at the mercy of their service. And so what we have found is that some clients have really struggled. So they've been more than happy with the mortgage application process. The lenders perform really in a very timely fashion. They've been super happy. It's got to the point of the legal work taking place and things have really ground to a halt. They've struggled to get hold of solicitors. It's been a really poor experience, and this has then delayed things. Now, particularly when we're looking at remortgages, if you've got a current rate which is ending and you're moving on to SVR, there is a time pressure here. People always think that remortgages are much more relaxed, there's no time pressures, but actually if you're faced with a higher interest rate, a penalty rate, before you switch over, actually there can be a real pressure here. So what I'm not saying is don't ever use a mortgage product with free legals, but what I would encourage you to do is ask the question, if I use the free legal service, if this comes with free legals, which is the firm that I'm going to and what's their service like? There's lots of reviews on the internet, and also a lot of companies now publish SLAs, so standard service level agreements. So this is actually quite transparent, so it's worth just doing a bit of research before you commit yourself to that. Okay, so moving on from there, so the mortgage works have made some reductions on their limited company rates. So they've reduced pricing actually by up to a pretty impressive 0.55%, and that's on their limited company HMO rates, 0.42% up to 0.42% reductions on standard buy-to-lets, and up to 0.3 reduction on their green mortgage offering. This is all in their limited company space. Now, why have they done this? Is it that they suddenly got hold of some really cheap funds? No, is it they probably overpriced things in the first place just to kind of get a handle on their business volumes? Yes, so what they've done is price things up, slow business levels down. Now things have calmed down for them. They're back on top of things again, so they have the wiggle room to be able to reduce their pricing down to start bringing in new business again. But do you know what? Whatever their reason is, it's actually really nice to be able to report some rate reductions to you. We've seen the Principality make lots of changes actually across their range. So they've increased some of their buy-to-let and holiday-let rates. They've also made a very, very small reduction to different products in their holiday-let range of 0.05%. So a reduction, but nothing to write home about. This is balanced by increases of up to 0.1% on the rest of their product range. We've also seen the Coventry make changes to their pricing. So what they did first of all is earlier in the week they removed all of their 5-year fixed rate products which had an arrangement fee of £1,999. So the Coventry are one of those lenders who have essentially 3 arrangement fees. So no arrangement fee, 999 arrangement fee and 1995 arrangement fee. And then the interest rates, obviously with the no arrangement fee, are higher. 999 fee, which is their mid-arrangement fee price point, would be the middle kind of level of interest rate, and then those interest rates with the 1999 fee would be the lowest interest rate. So they're just kind of essentially, as I would describe it, robbing Peter to pay Paul. And what they've done is remove those particular products from their range. They've also announced, rather cryptically, that all buy-to-let and portfolio landlord rates are increasing today, Friday, but they haven't actually announced what they're going to be increasing to. So we're watching this space on that one. Now, if I were to say to you that all of those rates that I've just updated you from, these all happened yesterday, that will give you a flavour of kind of how quickly things are moving at the moment. Prior to Thursday, what we also saw was the Nottingham increased their limited company rates by 10 basis points. Pepper make increases of between 20 and 40 basis points. Metro Bank have increased all of their 75% loan to value 5-year fixed rates by 40 basis points. Virgin have made increases, and Keystone Property Finance have also increased their rates by 25 basis points. We've also seen rate withdrawals and increases from Precise Mortgages, and also Paragon are putting their products today as well. So it is all going on at the moment. Now, I just wanted to briefly touch on something that Shawbrook have introduced into the market, and this is really centred around the green mortgage space, which I know lots of landlords are keeping an eye on, because 33% roughly of you are going to be faced with the situation where you're going to make some significant improvements to your property to drive up the EPC rating to a C or above. So I know that lots of people are kind of watching this space at the moment, just trying to understand how things are going to shake out and what kind of assistance they can get and what kind of funding as well to help assist with the cost of the EPC, the green improvements to their property. So Shawbrook are actually incredible in this space. So they're really championing the landlord in terms of green mortgages, and what they've done is just release a new incentive. So what they're saying is that if a borrower comes to them with an EPC rating of A to C, then they're going to offer a discount on the arrangement fee, and the size of the discount will depend on whether the property is EPC rating of A or B or C. So essentially, if you come to them with an EPC rating of A, the arrangement fee is discounted by 0.6%. If the EPC rating was a C, it would be discounted by 0.25%. So that's really, really positive. But more interestingly than this, what they are saying is that if during the term of the mortgage, if you started off with a property with an EPC rating of, say, for example, a D, and then you make improvements to the property and drive it up to a B, they will, on receipt of the new EPC certificate, issue a partial refund of the arrangement fee that you originally paid. So I think that's really, really commendable, actually. So what they're doing here is really rewarding landlords for making those green improvements to their properties. Okay, now with interest rates getting pulled left, right and centre, it does make for a fairly high octane situation, particularly if you're in the market for a mortgage. Your broker phones you up and says, guess what, that rate we were discussing yesterday, it's going at 3 o'clock today, and suddenly you have to scrabble around trying to fill out application forms and get all your paperwork in order. So what I wanted to do is really just give you some very practical advice in terms of readying yourself so you are in a position to kind of hit the go button if this situation arises. So the first thing to really keep in mind here is actually when is your mortgage rate, the interest rate that you want to apply for, secured. Now, with some lenders, we do your agreement in principle, and that secures the rate for 30 days. Now, this is the minority of lenders, I hasten to add, but they do exist. So, to do an agreement in principle, generally speaking, as a broker, really what you need as an absolute starting point is just an application form, enough information just to be able to do that for the client. And if the lender is one of those who books the rate at that point, then you've got some breathing space to go around and get the paperwork together. Now, in terms of those lenders who actually need the full application to be submitted prior to securing the interest rate, As a broker, what we would ask for, and I do appreciate some brokers may have some kind of differences to us, what we would need from you as a starting point to meet our obligations to the regulator are as follows. So a full application form. And so what I would say here, actually just kind of backtracking slightly, is if you are going to be in the market for a mortgage in the coming weeks and months, it really wouldn't hurt for you to have an application form pre-filled out and ready to go. So as soon as the deal that you want is kind of available or is about to be pulled, you can literally just fire it straight over. So you've got a couple of hours downtime at a weekend, just get an application filled out so it's ready to go, and then it's going to save you a whole bunch of stress if this situation were to arise. Okay, so back to full application. So in terms of the paperwork we need to see from our clients to be able to submit an application, we need to show to the regulator that you are who you say you are. So we need proof of ID, we need proof of address. We're also going to need proof of income. So some lenders, and this is very, very few of them, don't ask for proof of income. The vast majority of lenders do want to have this. And this is even taking into account the fact that some lenders don't have a minimum income requirement. So their position is, we don't mind how much you earn, as long as you're earning something, but whatever it is you do earn, you need to be able to demonstrate to us. And the reason they do that is largely, first of all, to get comfort, to verify that you are receiving some sort of income, no matter what the size of it, but also just to ensure that your tax affairs are in order. So if you're employed and that's the only source of income that you have, you're going to need to provide 3 months pay slips and a P60. If you are a sole trader, or you're a person who has rental income in the background, or you're a director of a limited company that has buy-to-lets, then you're going to need to send us your tax returns and tax year overviews. And this really demonstrates the lender, and they can see by looking at the full tax return that yes, here is the income, you've declared the rents for the properties to the HMRC, and here's the receipt showing that that submission has actually gone through. Now, if you are a limited company, then the lender's also going to want to see if they're available 2 years' worth of limited company accounts. Now, obviously, some companies, SPVs, that when they apply for mortgages are brand spanking new, there's no accounts, and that's okay if you don't have those. But if you are trading as a limited company already, then the lender's going to want to see the accounts. The other thing we're going to need to see is personal bank statements, 3 months worth. We will also probably want limited company bank statements as well. But I think really the key things that you're going to need to have to hand to get your application in and get your deal secured are application form, proof of ID, proof of address, proof of income. They're the really, really key things. So I hope that will help you in terms of kind of getting your ducks in a row so you're ready to kind of leap into action should the need arise going forwards. The other thing I just wanted to say, and this is something that not everybody is aware of. So when you apply for a mortgage, your mortgage offer, depending on the lender, is valid for either 3 months or 6 months. Now, if you think about the time frame here, so when you apply for a mortgage, it can take, I mean, ideally not, but between sort of 3 and 8 weeks to get your mortgage offer, depending on the lender's turnaround times, how complicated your case is, and therefore all the kind of questions it throws up. But it can take a matter of weeks. So let's say it takes 4 weeks. So 4 weeks to get your mortgage offer through. Mortgage offer is valid for 6 months. That's a 7-month period of time. So we're now in the middle of May. So 7 months from now would take us up to the middle of December. So essentially, anybody who is going to be remortgaging, needing to remortgage between now and the end of the year, is realistically in a position to take an interest rate, apply for a mortgage now and secure a rate on today's pricing. For those of you who watch this video regularly, you will know that the direction of travel of mortgage pricing is only going up at the moment, and there's no kind of expectation that it's going to come back down again. So realistically, if you can secure a rate now for a remortgage that's coming up at any point in 2022, then you've really got a window of opportunity to do so. Okay, now speaking to our landlord clients, there are quite a few of you who are feeling very nervous about your tenants' abilities to continue maintaining their rental payments in a period of time where their cost of living is increasing so rapidly. So I was really interested to see an article written by Landlord Action, who have stated that the number of landlords seeking to recover rental debt has risen by 180%. So Landlord Action is a eviction and housing law specialist, and what they're saying is that between April 21 to March 2022, the instructions for rent arrears recovery was up 180% to the pre-pandemic year, April 19 to March 2020. Now, what they also went on to say is that responding to the English Housing Survey, 4% of private renters have reported being in arrears. Now, there's an estimated 13 million people in the UK who are renting privately. So this suggests that approximately 52,000 people were in rent arrears between 2020 and 2021. Now obviously these figures are quite historic, but also keeping a kind of mind on the fact that the cost of living is increasing, tenants are going to be quite pushed as it is, plus rents are going up as well. Lots of landlords are increasing rents at the moment. I think it's just worth being incredibly mindful of the situation that some of tenants are going to find themselves in terms of being really, really pushed. So actually as landlords, I guess it does beg the question, is now the right time to be putting rents up? And I don't know the answer to that. Obviously every tenant situation, every landlord situation is different. But I know that my tenant, my estate agent that manages my rental property, have been very, very strong in trying to encourage me to push the rents up on my rental property. But actually I know that the family that live there live in a fairly hand-to-mouth way, and actually it just wouldn't be sustainable for them. So just something really to keep in mind. And that is me for this week. Thank you so much for joining us. As always, if you have any questions, please give us a call 0345 345 6788 or have a nose at our website mortgagesforbusiness.co.uk. Do have a wonderful weekend. I have to say I plan to spend a large chunk of this evening chinning a bottle of wine to recover from this week. So I hope, whatever your plans are, you also have a wonderful time, and I will catch you again next week.